Welcome to Rise Sessions. Alex, how's it going, mate?
Good to see you, Sam. All good. How are you?
Doing well, thanks. Doing well. Welcome, everyone. This is Rise Sessions. We're here to chat about what's going on in the markets. Excited today. We've got a special guest, Alex Svenovic. I struggle with pronouncing your surname every time, but I think I might have actually nailed it. Appreciate you jumping on, man. Founder of Nansen, has been in the space for a very long time, has his ear on the pulse with what's going on chain. Excited to dig in. Before we do, Alex, do you want to give the audience a bit of a rundown who you are, background on what is Nansen?
Yes. So I'm the CEO and co-founder of Nansen. We historically are known for on-chain analytics. People come to Nansen to see what the smart money is doing on-chain. We have more than 500 million labeled addresses across a wide variety of chains. And lately, we have been diving headfirst into the area of agentic trading because we think we have a unique edge there since we have the best on-chain data and we have a lot of AI capabilities that we've built up over the years. And my own personal background is in AI before crypto, actually. So we're making a big bet on agentic trading and happy to talk about that or any other things you want to talk about.
Awesome. Yeah. So today we'll jump into the AI topic and agentic trading more generally, and then I'd just love to get your insights on what's happening on chain. So let's jump into smart money particularly. So I remember when you launched this years ago, it was, I think Nansen's probably famous for the smart money product. Can you talk to us about how that product has evolved over the years and maybe how AI has played a role in that product as well?
Yeah. So when we launched, it was April 2020. And the main thing people used our product for was to see who was in the various DeFi pools. So back in those days, people would find various food coin Ponzi schemes or DeFi protocols. You can call them what you will. But one thing that people really wanted to understand was who else is in this pool? Is this a pool that will cause me to lose all my money, or do you have some smart investors with me in this pool? And so people would look for names like Three Arrows, Alameda. In hindsight, maybe they weren't so smart money, but at the time they were considered smart money. And so we figured, why don't we label all of these addresses? Because clearly people want to know who else is in these DeFi pools. So that was kind of the first use case. And then about a year after, NFTs really exploded. So we started focusing more on that. And when we added our NFT support, we basically tripled our revenues in a matter of 6 weeks. So many people still know us for NFTs specifically. But I think, we've sort of gone through a bunch of different narratives and popular things happening on chain, meme coins, obviously, and so on and so forth, tokenized stocks now. But the thing that feels very evergreen and universal is to understand what smart investors with a good track record are doing on chain. And so we sort of laser focused on that. And in the beginning, a lot of it was just about labeling the addresses, like who is behind the address. And then the second phase was about kind of qualifying their performance and saying like you qualify as smart money because your P&L is X, right? The thing we're focused on now, and we actually have a new release coming out very soon, is to predict who is going to make money in the future. And so we have an AI model that we've built internally, and we've been running for a number of weeks now. Well, actually, we've been building it for months, but we've been running it to see how it performs, where we are basically picking out, let's say, the top 100 traders that our AI model, which looks at a bunch of different behavioral variables, believes is going to make money this week. So to me, that's kind of smart money 2.0, and in some ways, kind of a holy grail. Like we're not telling you exactly which tokens are going to go up or down because obviously that's very hard. But it turns out that you can find some signal in which addresses are likely going to make money. which I think intuitively makes sense. Like if you look around you in crypto, crypto is not a very efficient market. And we all know people who are very good traders and have made a lot of money. And at the other end of the spectrum, we know that a lot of people are very bad at trading, right? So to me, intuitively, it makes sense that there is some predictive power in that. But that's the new thing we're focused on. It's called predictive winners, or predicted winners, sorry. And it'll be available in the product, I think, hopefully already next week, so people can check it out then.
Yeah, well, I can definitely appreciate that. It's possible to identify it. I know running a venue myself that there are particular characteristics just looking at a trading chart or their like time series, how they behave when they enter, when they exit. You can kind of tell when who's a serious trader, or whether or not they're on a lucky streak or not. Like the risk appetite. There's a lot of metric that I imagine you can pull from that.
Exactly.
That's really cool. I'm excited to check out that product. So Alex, it's Q3 2026. I think many would agree we're hopefully ending towards the end of a pretty brutal bear market. But we're on the backdrop. RWA perps are trading at all-time highs. The growth we've seen in Q1, Q2 have just been enormous. We've seen a recent resurgence of meme coins through FOMO and Robinhood chain. And then we've just seen the most aggressive move up in the crypto market, essentially since last cycle. So can you tell me, what are you seeing on chain? What is the smart money doing in this like fairly dynamic market today?
Yeah, it is funny because a lot of people kind of ask me about the on-chain perspective on the latest crypto move, and I think the reality is it was largely driven by, Trump talking positively about crypto, right? And some of the SEC changes that were happening, and then of course what you could see on chain was short sellers getting squeezed, and so and that's always delightful, right? So that's kind of the very simple analysis on the first move. I have seen that there's more activity on many of the chains that we follow. Obviously, you brought up a bit of a meme coin renaissance. I don't know if it's a full-blown renaissance yet, but obviously coins like Ansem, you're seeing Pump doing really well, despite a lot of the FUD around unlocks and that kind of stuff. And then FOMO, of course, which is doing a really great job at bringing in retail investors in a very engaging and fun trading experience. Although, let's see how many of them actually make money in the next weeks and months.
The numbers there are pretty wild. Like the win rate on FOMO compared to perps is just, and perps isn't great either. Like it's phenomenal.
Yeah, totally. It's funny because we've spent like a lot of time looking at this exact question, like, how many people actually make money, right? Because we kind of have to do it for smart money, but we also want to understand this like for our own users and on different trading venues. And you're right that actually perps is one of the categories where people have a higher win rate overall. I'm not sure if it's because you have more sophisticated traders there, but it could also be that you could long and short, so you have a bit more flexibility in that sense.
Is that even compared to spot as well?
Yeah, so when you think of spot, you have to kind of segment it. If you look at micro caps or like meme coins, the win rates are disastrous. Like they're like terrible. And we're talking about like in some cases like single digit win rates,
Wow.
right? So the vast majority of people are losing money, but of course it's a little bit like a lottery where also obviously it's a tiny win rate, but if you do win, you win a lot. So meme coins are a little bit like that. You could almost think of it as like venture investing, although it's like a very
that's risky way to
yeah, a very like how should I put it, unsophisticated way to do venture investing. But like the power laws are similar, right? You have to put a lot of different bets on, and then like if one of them pays off, it pays for the rest of the failed bets you made. Whereas perps, I think you can sort of try to have a close to 50% win rate, and of course like you can still make a lot of money with a low win rate. So there is, and And there's also a big difference on the different like builder codes and the front ends that you have. Typically,
As
the
in
more
the win rates
yeah,
differ based on the interface
yes,
used. Oh
that's
wow.
right. That's right. So and I don't know, maybe this is obvious, but the most popular trading interfaces do not have the best win rates. Maybe that's obvious, but like probably because they're more retail focused, right?
Yeah. It's like
Whereas
the
certain
least
yeah,
sophisticated flow, like most uninformed. Makes sense.
yeah, and you could maybe say that there are like two factors that explain this. The first one is what kind of traders do you attract? So if you attract quote unquote dumb money, your win rates are going to be worse. If you attract smart money, the inverse of that. The other way to think about it is what role does the product itself play in helping users win? And so this is where we as a company are really, focused, because our mission is to surface the signal and create winners, right? And to us, it's always really important that when people use Nansen, they have a high chance of making money. We can never promise that. Obviously, at the end of the day, the user controls the decisions, what they do with their portfolio, etc. But I do think we can influence their decisions in certain ways, and we should not be shy about that. Like the tokens you put by default on your homepage is going to have an impact on like whether users are making money or not. So we spend a lot of time thinking about this, and actually it's kind of the product North Star for the company to make sure that our users are winning on chain. And yeah, I sometimes wonder, like, I'm not sure all trading venues think like that. I think a lot of it is just volume first, and then like, well, it's on the user, if they win or lose, which is fair, but it's a different approach to building a trading product.
I think it's the right approach, honestly, and particularly for perpetuals, where the best outcome for perpetual markets is that the users are winning, and whoever is taking the other side of that is doing funding rate arbitrage and essentially
Right.
offloading that risk to another venue, because ultimately that means there is more capital coming into the venue on net. So yeah,
Yes,
I think it's like
totally.
the more
Yeah,
successful your directional traders are on the venue, the like that's just creates this compounding effect if you can make that happen. So yeah,
I think so. And like the other part here is, I think the big question of this upcoming cycle is going to be, um, are trading agents going to outperform human traders?
yeah, it's going to be
And
interesting.
like I mean, I think trading agents are going to outperform, but like you can debate where to set the bar. Are we talking like retail investors broadly? Are we talking about the market in general, S&P 500, Bitcoin, the best hedge funds? Like, where do you want to put the bar? But I think retail investors, they're going to outperform them. And then of course it depends like how you make the trading agents, but I can only speak for Nansen. I think the trading agents that will come out of Nansen in the next 6 to 12 months are generally going to outperform most other trading venues when you look at their aggregated win rate stats and P&L.
That's interesting. Do you think if you look at it at a macro landscape, if it gets to a point where everyone is trading with agents, does that not just essentially lift the floor and create a more competitive environment, or do you think there's going to be this period of maybe years where there is an edge in the cohorts that are predominantly using AI?
I think the latter. I think
Yeah.
I've referred to it as like the golden age of agentic trading, because I do think eventually um, you do lift the floor, and it's obviously going to become more competitive. But I do think we're going to enter a bit of a golden age now. It's almost like if you go back to, I don't know exactly when it was. It was probably like early 2000s when people started using tools for like poker playing online, right? You could make a lot of money if you were smart building bots that could play poker and so on. And you could do that for a while, right? It took some time before like that became kind of an efficient market.
I think
And
sports betting, like betting,
yeah,
building models for tennis, for instance, there was like a heyday for that when there was just lots of edge on the table if you knew what you were doing.
I think the same thing is going to happen with agentic trading. And the cool thing about this is like two things are happening at once. The first is that you're getting intelligence on tap that's getting smarter and cheaper every single week. That's like incredible. And at the same time, blockchains like Rise and others are bringing on more and more types of assets that agents can trade, like permissionlessly on chain, right? So it's kind of like the perfect storm of agentic trading, and I'm just so bullish on this trend because I think it's kind of obvious that like all knowledge work is going to benefit from having intelligence on tap as a commodity. And I don't see how trading and investing fundamentally is that different from like a lot of other types of knowledge work. So yeah.
It does feel naive to treat this like Go or chess, when 20 years ago no one thought that humans would ever get beaten by a computer. And it feels like it resonates with that, but trading does feel so different. But people back then were saying, no, Go is completely different. You need to have a feeling about it.
It's so funny if you look at the history of AI, right? They always like move the goalposts. It's like, yeah, well, a robot could never write poetry, and it's like, well, now it's writing fucking poetry, and it's like, well, it can't compose a beautiful piece of music. Well, it can do that as well now. And to your point, it can't play chess. It can't beat the best chess masters. Well, it did that. And so you kind of just keep shifting the goalposts. And it's funny. I feel like we are at that stage now where like investors and maybe some of the best traders, they are like, no, like an agent could never trade or invest
it feels like
because
that.
of some like BS reason, frankly. But there's kind of a blind spot there, I think. Like I think it's going to be super obvious in hindsight that of course these things can like absorb information, execute on a strategy, learn, all these different things.
It does feel like it's rhyming. It's a very similar format. So I'm on the fence, but I definitely see
it's on
the
us to
potential.
prove. Yeah, it's on us to like the burden of proof is on us, right? So what I would like to do, like in the next months and years, is to publish more results of like, here's how it's working, like here's what's actually happening. And if you like, many people of course follow new models dropping in AI and that kind of stuff, and you have benchmarks and all that. It's a little bit surprising we don't have more benchmarks on trading performance, but that's definitely going to happen. And so, of course, we're going to be throwing our hat into that ring once that starts becoming more popular. But it
is this
fundamentally
like having a framework to benchmark models on trading?
Yeah, basically. Okay. And we should have like trading arenas where, I mean, we have some, but they're like relatively small, and a lot of the agents frankly are not good enough yet. But you've seen like the robot what is it, like Olympic Games or whatever in China, right? And it's very analogous also, right? I think this stuff is kind of entertaining as well, in addition to kind of being like just competition. So
the analogy of the robots running into the wall at the end is aligning that with trading is like, all right, it's straight up the short.
That's the liquidation. Yeah, exactly.
That's right. Awesome, man. All right, I'm keen to dig into AI a little bit more, and then we can touch on RWAs towards the end. So the way the world interfaces with technology is changed. It's changing every day. Even myself, the fact that I spent 10 years as a software engineer and I haven't written a line of code outside of tweaking some configs for over 12 months. Oh, not 12 months, probably like 6 months. I'm not in the low level systems team at the moment, just for the users not to be worried that we haven't vibe coded our exchange. I'm in the business team at the moment. But yeah, the way I interface, the way we all interface with technology is changing. And we've seen experiments or attempts at changing how we interface with trading using agentic tools. So I'd be curious to hear your thoughts on that. Like, how's that user experience going to be? How's that going to change with users interfacing with a venue or venues? Like, if it's through a new interface, the venue is kind of arbitrary. So yeah, I'm interested to see how you see that is, like, where it is today, what's going to change.
Yeah, so the mental model I use here is a trust ladder. And the idea is that you have to take the user on a journey where they trust agents more and more and are comfortable delegating to agents more and more. And so think of self-driving cars, right? That is exactly what they've done in self-driving cars. You literally, get the human to sit in the driver's seat, like maybe even your hands near the wheel. You have a little screen on the right that shows the vision technology of the self-driving car, and you're kind of keeping the human in the loop, and like you're ready to intervene if you have to. But over time, and in fact, that's kind of becoming normalized. If you think of Waymo's and SF, or if you think of Didi and other ride-hailing services in China, that you just sit in the back seat, right? And so, similarly, I think with trading, at least the approach we are taking is to keep the user in the loop as a co-pilot in the beginning, to build trust, but also to improve the technology itself. What that means is like you have a conversational interface where you can talk to the agent, but the agent can place trades for you, right? So you're saying, hey, I want a 10x long SpaceX. Okay, cool. Like, what's the amount? This amount. Okay, done. Right. And you just like tell almost as like a broker in the 80s on the phone. That's kind of the user experience you have if you use our mobile app, Dance and AI today. But very quickly, when you show this to people and they kind of start enjoying it, they're like, hey, how can I just get it to trade autonomously? And so that's kind of the next step. And you want to be able to tell the agent what to do, express some thesis or a strategy or something you want it to do, but you don't want to sit around and click the buttons, right? And so that's kind of the autonomous point, where we are building a new product right now that's going to launch in closed alpha in hopefully 2 weeks or so to the first users. And in that product, you're literally just letting these agents trade autonomously. So what does that mean in terms of the trading venues? Well, I think these agents ultimately, if you want them to be the best possible trading agents, they will have to be connected to, the most liquid venues where they can place trades, and also to venues that give you a maximal inventory of assets to trade, right? And so it does change maybe the dynamics a little bit with regards to distribution, because you kind of abstract away the trading venue and you just have the trading agent as a type of aggregator that sits on top of it. But that's kind of the approach that we are pursuing. And it does mean that the blockchain, at the end of the day, obviously has to, in addition to being low latency and kind of having 100% uptime and all these different things, it needs to be a place where you have a broad inventory of tokenized stocks, gold, silver, prediction markets, like what have you. And you need to have deep liquidity, obviously, so that the execution doesn't have poor slippage and so on and so forth. So I think that's kind of generally how I envision it. There's going to be there's a few different modalities to think about. Like, one is, do users want to build their own trading agents, like fully control a lot of the stack and maybe just pull in a CLI or an MCP at certain points in the stack? Or do they want more of a kind of pre-built platform where they just say in language what they want to do? And I think different users will prefer different things. We think of these as like, builders are going to want to use the Nansen toolkit, the CLI, the MCP, the API in their stack, running Hermes or OpenClaw or whatever. And then the kind of automators and delegators and kind of more normies, mainstream traders, are going to want to have a fully built out product where they don't have to assemble all the pieces themselves.
So you have both these products out live. You've got Nansen CLI as well as your MCP, as well as, and you can trade directly in the Nansen interface using an agentic chat-based interface. Where are you seeing the adoption from your users? And I'm also curious what kind of trading those interfaces you're seeing from those two different interfaces.
Yeah, the reality is most people still trade manually, like in a terminal type manner. What we have seen is that the people, going back to the question on win rate, the people who have the highest win rate are actually the users who do both, who both trade agentically and also trade through swaps and kind of terminal type trading.
What's the
Um,
criteria for trading? Is that like doing the research or just like actually pulling the trigger and the
Actually
agents
pulling the
doing the
trigger.
trading?
If
Okay.
you have done both, if you like pull the trigger, for example, on mobile, it's very convenient to do it agentically. Like if you're on the go, you're like, hey, just go and buy like $100 at Ansem, and it's almost like texting a friend, right? Then it's like, okay, cool, I found it, and then boom, executed. You don't have to like search for the token and all that stuff. It just does that for you. So I think a lot of people like that user experience on the go with mobile. Whereas on desktop, I think still people like the kind of chart type terminal UI. That's what they're used to. And so they're quite sticky on that. So I guess like the other way to think about the trust ladder from a more like pessimistic point of view is that the conversational but sort of manual trading user experience is kind of like not what is the expression, neither here nor there. um and and it's kind of like, you could argue that it's the worst of both worlds in some ways, right? Because like, hey, I just want this thing to now go and execute on my behalf, like fully autonomously, but it can't do that. And so
Similar to
so
or not the words
autonomous.
autonomous driving. That like
Yes,
having autonomous driving, but you have to keep your eyes on the road and your hands on the wheel is like the
exactly.
worst of both worlds.
Exactly. But it's kind of like an uncanny valley is another way to think about it. It's like you kind of have to just go through that in the development phase, I think.
Yeah,
And I don't think there's a way to like just skip that step, right?
got to
But
persevere to build that
yeah,
trust.
so I think what I've observed when I kind of run user interviews and like put the product in front of people and just see how they react, they very quickly, the people who are AI native, very quickly want to go to autonomous. And so it's almost surprising that they want to go to autonomous really quickly. And so that's why obviously we've also accelerated our focus on autonomous trading agents.
So a fully
Mm,
autonomous trading agent, the kind of agent that can monitor the market and react
correct.
based on the
So,
the setup.
here's the way to think about it. Like when you create it, you might have like a vague idea. Hey, I want to trade Korean semi stocks, long only.
I'm missing
You
out
know,
on the AI trade. Can you make sure I get exposure? Like that kind of.
yeah, exactly. That's like a vague idea, right? And then a strategy agent helps you co-create a strategy, right? Because what I just said is not really a strategy. It's like kind of a vague, hand wavy thing. And so it takes that as like, okay, cool. Here are like maybe the assets to trade or like the criteria for them, and like, here's the chain we're going to trade on or multiple chains. These are the tools we're going to be looking at. These are the data points, whatever. And once you have that strategy, which is literally like a markdown document, it's not like code, it's a markdown document. Think of it as like strategy MD, if you're familiar
Mm.
with like agents MD and so on, or Claude MD. So it's like strategy MD. And then when you execute on it, the trading agent is literally just a loop that wakes up at some regular cadence. It could be every 10 minutes, or in theory, every 1 minute, or every hour, or every day. It wakes up, it has like it's a harness. So it knows what it's supposed to do, and it looks at the strategy, and it has all the tools that it needs to execute on the strategy, which could be looking at Nansen data, or it could be executing trades on chain. And so it literally just wakes up every hour, and it does all the research required to execute on the strategy. And then it's like, okay, I think I need to reduce my NVIDIA, exposure, or in the Korean semi stocks like SK Hynix or whatever. And and then you can, obviously monitor how it performs. So it's basically like research, due diligence, and execution in one trading loop that happens without you having to be glued to the screen, which I think for a lot of people, frankly, is quite compelling conceptually, because a lot of us do not want to be glued to the screen looking at charts all day and like reading stuff like all day. but we do want to have some like directional exposure to certain things that we believe in, and you might believe that there is an edge to be made, but again, you don't want to be like spending all your time doing this, because you might be time poor, right, but capital rich or somewhat rich or pre-rich. And so I think that's what's compelling for people, that if you are AI native, if you are time poor, there has to be a better way to get exposure in the markets where you don't have to spend like 30 hours, 40 hours glued to the screens.
Because it's a lot of work to build a sound trading strategy. Even just understanding your risk profile, that you're willing to take on the diversity of assets you're deploying to, and then even when you're executing a trade, you want to specify what your stop loss, what your take profit is going to be, when you're going to shift after that trade. That's the hours and hours a day can be spent on that.
And you have to kind of adjust it, and like this, it's not, it's a lot of work. Gotta react to it. And then I think you mentioned earlier, like funding rates, right? We do a lot of R&D on different strategies internally, not because we want to find the best strategies, more like we want to battle test the system and find ways to kill bad strategies early and that kind of stuff. And one of the strategies that we saw has been quite good is a strategy that's focused specifically on funding rates, like
just funding rate arbitrage across venues.
Yeah, funding rate arbitrage, and to take take advantage of crowded trades, to just make money on funding rates. And this is something that is quite complex for a retail trader, and especially to manage like day to day or like hour to hour. That's a lot of work. But conceptually, it makes sense that you should be able to tell an agent how to do it, right? And you don't even need to like program it, because it's smart enough to understand it. So that's like an example. And I saw another example the other day, which maybe you saw the same thing. It was an investor on X who went kind of viral because he posted a chart. I think it was Micron chart that said, if you just bought at close and sold at open, you would have made like an insane amount of money on Micron. And I literally took that and I copied it into this platform we have now. And I said, like, spin up a trading agent and back test that strategy. Like, I didn't program it or anything. Like, I just said, like, here's the strategy, back test that. And it back tested it, and it was like, oh yeah, that's like 13% returns in like 2 weeks. Okay. And then I could just run it in paper trading mode, where I don't commit any capital, but it's executing the trade in that loop that I described, and it's just logging its trades. And then finally I could fund it.
That's all through your UI, the Nansen.
It's not available yet, but it's this is the thing that's in R&D, and it's you can actually sign up for a wait list for it if you go to app.nansen.ai/NAN for Nansen Agent Network. And awesome. We have a wait list. We haven't actually promoted it from our main Twitter account or anything, but I kind of wanted to just drop the link out there and see what people would do. And there's a referral code system, and we have like a few thousand people who just kind of somehow found their way into that website.
They probably got an agent looking at your domains and found the website.
Yeah, maybe. Yeah, that could be it as well. Yeah.
Oh, that's awesome. Well, I'm definitely gonna hit you up for DMs to try and get into that wait list after this.
Yeah.
Awesome, man.
Go for it.
Yeah, I honestly, I think my position, my pricing on the prediction market of the future UTCs increased during this call. I think there's definitely something to it, particularly for the people that are time poor. I think it makes a lot of sense. I'm keen to chat about RWAs briefly, and it's actually interesting how this plays with agentic trading. So we've seen insane growth Q1, Q2 in RWAs. 5 billion open interest we reached, and there was a daily volume one of the days in August we hit 10 billion in volume across the on-chain market, which is just phenomenal. I think SK Hynix did more volume than Bitcoin on Hyperliquid one day. And if you look at the volume charts on Hyperliquid and even Binance today, if you filter for crypto, what you see is it's just like very long tail, like sharp. It's pretty much Ethereum, ETH, Solana, and then just long tail. And on Hyperliquid, there'll be hype there as well. But then if you overlay with the RWA assets, you see this like fat tail, that there's the volume
Yes.
in like gold, silver, SND, Micron, SK Hynix, just like very, very different curves. So there's what that's interesting to me because it indicates that there's more opportunity for those more liquid markets. Like a lot of people prefer to trade Bitcoin, ETH, and Solana because they are very liquid. The volatility is something that you can somewhat depend on, although the like AI trade volatility they've been trading like altcoins, which has been wild. But I think there's been a clear shift in volume. And I'm curious, I wanted to ask you from what you're seeing in the data, I'm curious who you think these users are, or what the data is saying these users are. Are these users the users that are predominantly trading RWA perps on chain today? Is it crypto users that have caught the RWA bug, that interest in this new market? It's where the exciting assets are. They've shifted their attention, they've shifted their activity, or are there net new users coming on board and starting to trade these assets on chain?
Yeah, it's a great question. If I look at our own trading data, so people who trade on Nansen, I see the exact same thing. That if you look at the top 15 most traded perps, 10 of them are RWAs, only 5 are crypto.
Imagine saying that this last year. You'd be like,
yeah, right? It's crazy.
That's crazy.
And to me, it's very odd because in a way, like we've built our whole product around crypto, and then people still come in and trade like SK Hynix and stuff like that, or SpaceX or gold and silver. So I think it's a little bit of both. And it's actually a great question. It's something I'll try to look into a bit more in our own data. Whether there's like overlap of people trading crypto and RWAs, or if there are certain people who only trade RWAs. Obviously, our data is somewhat skewed because we have a crypto kind of leaning audience. But anecdotally, I think what I could say is even crypto people are not trading crypto, is kind of the feeling I've had for the last 12 months. Like including myself, right? Most of the stuff I've been trading on chain is like AI stocks, Nebius and Cerebras and Nvidia and Apple or whatever. So I've seen the same thing around me. Like I've seen not that many people trading crypto. The exception might be the meme coin stuff that's happening around FOMO and pump and so on. Like that's kind of growing again now, and it's obviously like very crypto native. But I would suspect that a lot of the RWAs are actually crypto native people who are not trading crypto. They're trading these other assets instead. And maybe that is partially the explanation for why crypto markets have been quite bad, because they've been cannibalized by RWAs on the same interfaces and products. I think that's like the most likely thing. And if I kind of think about anecdotally as well as some of the stuff we've seen in our own data, I think that's probably what's happened. I don't think a lot of stock traders have moved from like Interactive Brokers or Robinhood to Onchain to trade stocks yet. I think that's still that's going to come later. But yeah, so if I were to guess based on all of that, I think it's more crypto native people who are trading tokenized RWAs.
That's pretty much what I've seen. It's very hard to tell given on chain, like you build a business on being able to understand what's actually happening. But yeah, it's hard to tell even with new addresses that are trading predominantly RWAs on the transparent exchanges like Rise and Hyperliquid. It's still difficult to tell if they're crypto or they're coming in from external. But what do you think it's going to take to begin to start onboarding some of these traditional market participants that enter crypto for the RWA trading?
Yeah, I mean, firstly, I don't think we'll be able to beat the traditional trading venues at their own game. And like, we can't just do the same as what they're doing. I personally think that the fact that blockchains are transparent is quite compelling, potentially, that you can see what the smart money is doing. Of course, that's like a big value proposition of our product. But I do actually think that, if I'm new trading some product or some asset, um, I would feel more reassured if I could see who the top buyers or sellers are and whether those have made money for any asset. And it's not, I've thought about this a little bit in the context of like RWAs and stocks and so on. Obviously, like some hyper liquid or rise trader on chain is not going to like move the market for a stock because we are quite small traders, but they are still signals that can tell you whether, you know, the smart money is bullish or bearish on something, right? So I kind of think of that aspect as quite compelling. And this is where I think obviously FOMO has done a very good job of like the social trading narrative. But I think there's a lot more we can do with that narrative to help retail investors better understand how they perhaps should position themselves in a trade. So that is one thing I think is unique with the on-chain approach, and you cannot really do it that easily in the traditional world in terms of seeing real-time trades and like buys and sells and the track record of all the traders in a specific stock. So that's one thing I would lean into. And then maybe the other thing would be like DeFi, although obviously it's not a huge narrative right now, but it is also quite compelling that if you own a tokenized stock, that you could financialize it and do other things with it and get yield on it and that kind of stuff, which is kind of hard to do in a TradFi world.
Yeah, absolutely. You can essentially make more money because your assets can be more capitalized. Like you've got more efficiency
Correct.
from it. So yeah, I think that'll grow. We haven't seen that tokenized equities has definitely been lagging the RWA perps, but I do think there's going to be a surge in hopefully in the next 12 months. I anticipate.
Yeah.
Awesome, Alex. I really appreciate you jumping on, having a chat. I'll wrap things up with one question. What does the data consistently show that the market refuses to believe?
That's a philosophical question. Well, the boring answer maybe is Bitcoin higher lows. it's somehow, I mean, like it's kind of an obvious thing, but um there's so much money printing and QE and various shenanigans going on around fiat currencies, and you know, for that reason you get higher lows in the Bitcoin price. And so I think that's like, maybe that's an answer to that philosophical question.
It's interesting one. That's almost where retail has an edge over sophisticated parties.
I think it's like left curve, right curve IQ meme. I think that's like kind of what it is, right? It's like, well, higher lows. It's like that's the left curve and the right curve, and it's like, no, you can't just, like the one in the mid curver. It's like, no, you can't just buy the higher low of Bitcoin. But in a way, it has like historically worked out great. And I think it's just a function of the fact that you are flooding the world with fiat currency. So, you know, how can you fight that, right? Why swim against the stream?
That's a brilliant one. Awesome. Thanks so much, Alex. It's been a pleasure having a chat and kind of just riffing on AI. Personally, I'm going to jump on Nansen and test this out. Actually, one last question. If I wanted to set up an agent today, say like I'm myself, like many other people in crypto that are like learning how to trade RWAs and understanding like how the market moves at open, close. You've got earnings reports, how to trade these different events. I have an events calendar now, which I've never had for trading because it's 24/7. So I want to spin something up, and I want to trade on RiseX to do it. Is the Nansen CLI something that I could use for that, or is it?
So maybe I'll just ask a question. Do you have like Hermes or OpenClaw, or what's your sort of preferred agent UI? Is it like Claude or Claude Code or Claude? Okay. So for Claude, you can use our MCP. you can actually, I think you just go to app.nansen.ai and there's like an API section. There's a tab that says MCP. And I think it's literally, if you have Claude Desktop, a one-click install to get Nansen's MCP in your Claude Desktop. You just have to paste in your API key. And now Claude has eyes on chain. So
That's awesome.
that's probably a good way to start.
And where will the EOA, the wallet, be? Will that just be like a local private key on my desktop?
Yeah, so if you're using Claude or Claude Code, you have to manage the key yourself.
Okay.
If you use Claude Code, however, you could use our CLI. By the way, you can also go to agents.nansen.ai, and we have kind of links to the CLI, the MCP, and the API. And the CLI actually helps you create a local wallet. So that's quite convenient. You can actually just tell it, like, hey, just spin up a wallet locally. Obviously, you should be careful with that, depending on where the agent is running and all that stuff. But that's actually another like very easy way to do it.
Awesome. I might have to trade Nvidia's earnings today with Nansen CLI.
Yeah.
Awesome.
Hope you make money.
Thanks a lot,
Cool,
Alex. Appreciate your time. Great to chat.
Yeah.
And for those listening, go check out nansen.ai or agents.nansen.ai.
Yeah, both are fine.
And whether outside of Nansen, where can people find you personally?
Yeah, so I'm on Twitter. A Svanevik is my handle. Look for a pudgy penguin with a Viking helmet and a blue kimono. Yeah, thanks for having me.
Awesome. Thanks a lot.